Hey guys, it's Jason here with another trading video. I'm going to be doing this video on ticker symbol PIRS. I got in on the long side today, kind of looking for a bounce play after a big sell-off this morning. This is the daily chart. This is the previous runner. This is a really volatile stock. I mean, it skyrockets up, then it just crashes down, and I was looking for something similar to that. Yesterday it had a real nice run. Um, it went up probably like 50% or 40% or something like that, and it opened up really high and it just crashed down this morning, and I was just looking for it to bounce. I was looking at this short trap setup, and it worked out pretty good, but it didn't really have much follow through. Kind of show you what I'm talking about here. Um, this is the 5-minute chart. The chart previous was the daily chart. Each candle is a day, and if it's a green candle, it opened up here in the morning, and it closed here in the top of the wick. This is the high of the day, and the bottom of the wick is the low of the day. So if it's a green candle, it started here, then it went up. But if it's a red candle, it went down. So this opened up here, it came down. This one opened up down here and it went up. And this one opened up at 9:30 and it just came down. This one opened up about the previous, closing price. It opened up there and it went up. So you can kind of see, there's a lot of gaps up and down, and when it gaps up super high, it likes to sell off. And that's what it did today. Yeah, but I was just looking for a short trap setup. I usually don't look for these on stocks that have crashed down so much, but this has got such a history of running, and there wasn't really much opportunities this morning. There was, but I'd either gotten into them really late, or I was getting ready to put in my order, and it already passed my entry, so it would have screwed up my risk and everything. So I'm not gonna chase it. Just let it go. But what I was looking at, okay, you see how it went up yesterday. The day before that it was 350 or so, and yesterday it closed around say around $4.30. So it went up a whole dollar almost. So that's probably like 30%, or more. But this morning it opened up super high, and this gray area is pre-market. So this is before the market opens, and stocks can still be traded during pre-market, but usually there's not as much volume. Volume means buyers or sellers actively trading it. But this opened up really high. Crazy volatile stocks like this. A lot of people playing it. Even pre-market's going to have a lot of volume. But it started selling off in pre-market. I mean, it just jumped up super high. It says a high of 543 right here. It just starts, making these, lower lows and lower highs. And when the market opens, which are usually a lot more volume comes in, you can see down here, these green candles, these blue candles down here are amounts of volume. So, pre-market, there's this much volume. It's enough to get a stock up real high, but the real volume kicks in at 9:30 when the market opens. But it just sells off pretty hard. And you gotta understand, when you're trading stocks, there's buyers and there's sellers, and there's people, selling stock. They're shorting it. Same thing. They're shorting it. Same thing as sellers. Um, but they can also be buyers if they get stopped out. Like, short sellers, they want stocks to go down, and they want it to make lower lows and, lower highs. And sometimes when a stock's, crash like that, short sellers are just licking their chops. I mean, they're just watching this thing go down, and they're making money as it goes down. There's a lot of people, obviously, shorting this stock because it gone up so much in pre-market and it dropped so hard. But what I look at when I start looking at short traps is my consolidation level to where prices hit a certain point, then went down. Like this particular stock hit the level of $4.20. You see, look at this candle, a high of $4.20. Let's see, $4.18, $4.18, $4.20. So it hit 420. No joke, 420. But it hit 420, I think, like 3 times in here. And short sellers are like, well, I'm going to short it at 420 or 419, then it's just going to go down. And they can use their risk off that level of 420. Be like, there's a wall there of sellers that's selling at 420, and it's not going to go above that. You see this? I want to see this line right here. They're like, it's not going to get past that. It's just going to keep bouncing off of it. It's going to go down, and then it's going to eventually make lower lows, if it can't get past it. And short sellers are risking off that level. If you're wanting a stock to go down, you'd want to sell it high right here where it's bouncing off at, then cover, somewhere down lower. You'd want to use this level to sell it, then buy it back somewhere down here or even down here or whatever. And if it gets above 420, if it hits 421, you're getting stopped out. You're buying those shares back to replace, because that's how much you're risking. I mean, it's the same way with if you're buying off support. Only it's the converse. It's the opposite. So I bought where I knew other short sellers were gonna buy at. I went long on this trade. I didn't go short. But let's go to the 1 minute. So you can see this wall right here. Okay, it hit it here and here and here and here. And I said, if it gets above 420, if it hits 421, I'm a buyer. Because all these short sellers are going to get stopped out. They're going to be buying too, which is going to cause the price to go higher. And that's a short squeeze. And sometimes it can go parabolic, sometimes it doesn't. It just depends. Sometimes, one little short squeeze like that like 420 into 421, where all the short sellers are buying the cover, sometimes that'll, let's say the shorts are using this level to risk off of. Okay, well, sometimes, they use like another level, like the shorts they got in here. They're using that level to risk off of, or whatever. But there's certain people that got in short here and that are going to get stopped out here. And there's certain people that are going to get stopped out at each one of these checkpoints. But then it could also, the price could get rejected and it could go down. But, so I got in here at 421. Shoots up to a high of 429. Then it sells off. I bought at 421 and I got stopped out at 419 for a $20 loss. I was really wanting to get more out of this trade than that. I initially got in at 421. I set my stop at 416, about 1%. Because it dropped down here, then it shoots up, then it gets to a high of 423 right here, consolidates, then it just goes higher. I thought it was going to be good. I didn't think it would get, sometimes these pan out, sometimes it doesn't. Sometimes it's the overall market that there's just not a whole lot of follow through that day. And it's whatever. You don't have a crystal ball. You can't predict the future. But I was hoping 420 would hold that level. It got up here. It got up here, 429. I set my stop at. I moved my stop to 419. I'm like, well, if it goes against me, I'll only be losing 0.5%. But it's not a big deal. And like I said, I was hoping 420 would hold, and it did hold for a little bit, but it just, it just didn't have much follow through. I mean, the stock dropped a lot that day, today, and it was just weak today. I was hoping more of a short squeeze out of this. I was hoping to get like maybe in like the 440, 450 area. It made it to 429. Then it got rejected, and it got rejected on this level right here. This high right here is 430, and it couldn't make it up that high. So you see this bottom right here, this bottom of 430, this support became resistance. It cracked down through here. It cracked down through support. So it hit support 3 times, then it cracked down below it. And when it tried to come back up, it hit that level, then bounced back down. It couldn't break above it. So, what once was support is now resistance. You got to remember that too. I should have been more mindful of that, but usually way I play stuff out, I'll see a good setup like this, and I'm like, oh yeah, this is gonna squeeze, and I'll just, if it looks like it's, there's good risk to reward setup, I see it setting up pretty good, and I'm in the green, then I'll just kind of let it, do its thing or whatever, and set my stop pretty tight to where I'm not like losing much on the trade, if any at all, and just kind of let it do its thing and squeeze the shorts out. But this level, there was sellers, too many sellers to get above. I was looking for it to like pull back, and curl back up and squeeze more shorts. Because this stock does have a history of a really voracious pullbacks. You look at yesterday. I mean, it just, and it does squeeze shorts though. I mean, like this level right here, this level, it shoots up above it. The shorts getting out, the breakout buyers getting in. But then there's this pullback right here. It's ugh. I hate stocks that will break out and just pull back viciously. I mean, it's just hard sitting through. You're making a bunch of money on the trade, then you're going to like pretty much break even. And it's like, well, when do I sell? So sometimes you just want to use that breakout level as support. Sometimes I guess it just depends. But yeah, today was a $20 loss on ticker symbol PIRS. It wasn't a bad trade. It was more of a I don't want to say boredom trade. I mean, I saw the decent setup. This isn't the kind of setup I normally go for. But, I mean, when I saw this higher low and the consolidation, I knew that it could potentially squeeze some shorts, and I could possibly, get maybe like 5 or 6% out of it. But now I have a loss of 0.5%, so $20. Not too bad. I didn't go real big on this trade. I didn't really see too much potential in it. I mean, I could make some money, but it wasn't like, I mean, let's go to the 1 hour chart. I mean, you just look at how much this is pulled back. And when it pulled back, it could have came back up, but it probably would have stalled in the 440, 450 area. I would assume it didn't even get up that far though. I was wanting it to get above in this area, then I could use the 430 area as my support and potential stop loss if it would get above that area and trade in range like in this area, but it didn't do that. Yeah. I think looking at my P&L, I think I was up like $72 or $80 on this trade before it started going against me. So, but I like letting trades work out and do their thing, because my biggest winners are from trades that I wasn't even watching the screen or anything. I was just doing something else, kind of not, letting my emotions get the best of me. Well, this is my trade today. $20 loss. Not a big deal. I'll get back to this again next week. Thanks, you guys. I hope you like my video. See ya.